Hello, Face. How are you, Warriors? Good turnaround Tuesday, except that Asia and Europe stole our turnaround Tuesday. Can you believe that? They front run us in front of this. Hello, Bob. How are you, Windsor? Zig, my bro. Everyone doing okay? So, Blake's been talking about the head and shoulders in the euro and continues to develop. We're pushing right up against the daily 50-day moving average. Looks pretty good to me. Dixie finally showing signs of pretty good weakness, though a lot of purists are going to want to see closes under 96. Mo seems to be breaking, and if we take out 96, I think 94.25 is very possible. And if you are a subscriber, you have some nice positions on if you participate in our pattern and plays. Okay. So Andre's already got a nice scalp in Bitcoin. He's long, not huge targets, $200-300 bucks in Bitcoin. That's working. Steve, short Swiss, that's working. Grega had a lot of patience. He always has a lot of patience. So very nice trade working here, from the 1221 area in gold. And Blake caught the short side of NOK. So as you can see, there's a lot of great positions on. You know why? Because there's a lot of great traders. Greg is finally in the money here, looking for, I should cover up the target, 117. So if you think you're late, it's really just beginning. I would think about that big day we had where the dollar reversed right here, okay, and everyone thought, oh, I missed it, but actually you had another great rally back to 730 to get short on the way down. Also, thank you, FX gods. We finally had some resolution on the short side of US dollar yen. A little short-term look here. That once we took out 40.38, it was going to look pretty negative. So you have a little bit more than equality here in the yen, but I would call this a, pretty substantial break. And I don't know why we can't see 10.5 back to major support. And this is very constructive. The metals, as long as US dollar yen is going down, metal should continue to go up. The same scenario with the yuan. Okay. Same situation with the yuan. Big breakdown yesterday after the trade deal. Big follow through today. Morning, Blake. How are you? And with that being said, and that action confirming yesterday's strong day in precious metals, we're getting pretty good follow through. I think gold's up about 8. Oh, here it is. Threatening the breakout that people have been talking about. So a lot of people aren't even long yet. They're waiting for 43. But to me, it looks kind of like a layup that we have 1260 to 1280 here. And then even though gold is strong, it's up 0.68%. And Steve showed the gold-silver ratio yesterday, which looks to have peaked. And silver is twice as strong as gold today. Yesterday, they kind of evened out when you had this tail here, and silver gave some back. And 1550, why not? Dixie 94 to 92, why not, right? And yen, why not 108 or so? So I think today it's pretty decisive, but then again, look, you have a national holiday of mourning. Will be closed in the States tomorrow. Full session Thursday, and then NFP Friday. So take care of your business before the NFP. I don't know. Some of the guys, they don't care about it. They don't worry about it. But, there's always another trade, and to me, it's binary, black or red, roulette bet. I'd rather have my levels ready and react to the reaction than try and predict which way the market's going to react to a number that I have no idea what it's going to be. So good hunting. You know, I don't think anyone, you know, we haven't been talking about the long dollar. A lot of the charts of the day have been implying weak dollar, USD NOK, too many to mention. So if you haven't already, why don't you give yourself a Hanukkah gift? And if you don't sell Hanukkah, how about an early Christmas present? And immerse yourself in the analysis of Blake and Grega and Andre. I think Andre is going to be with us. Grega maybe will be with us today, and Blake and Steve. And not just for an hour a day, but all day, or as I know, Richie would say, it's here for you all night long. All right, so it's here for you all night long. You could take us on vacation, put us on your phone, be trading from the beach, living large with your team right there at your side. So no big risk to check it out. You know, also, when you do become a subscriber, I think it's very hard to judge any service, any money manager, anybody, any trader in 30 days. I think if you don't give somebody a quarter to see, do I serve drinks? Yeah, sure. Yeah, pineapple juice. And so, you know, why not risk the dollar to be immersed in it and part of it? And again, I think 90 days is a reasonable time period, no matter who you're involved with, whether, you know, it's an RIA or a hedge fund, a signal service, a platform like ours. I really think to give it a good judgment, minimum 90 days. So with that being said, Blake's back. I hope his back's okay. You know, he was working as hard as any 20-year-old guy, helping his wife. What a great husband, lifting 4,000 boxes for her yesterday, when he could have just made, you know, 1,000 pips. So you're a good man, Blake Morrow.
Damn. Yeah, that was, you know, I mean, yeah.
That's a hell of a honeydew. I guarantee
it was.
Any of our viewers or listeners, you know, they complain about having to run to the store, you know, so.
Yeah, it was a tall order, and I'm like, man, really? That's all right. Do what you got to do. Oh, I feel fine. No, so yeah, the dollar. You know, actually, what I got to show you this morning is I've got to show you. I mean, I could go and show you the euro and show you the same inverted head and shoulder pattern, which, you know, you guys all know about. It's not, you know, anything that's, you know, here's the euro. No, not a mystery. Everybody knows about it, and but look at the dollar index. Okay, so the dollar index. Okay. Yeah, this looks
like the yen did the same thing.
Yeah. And the dollar yen's it's trying now. Now, let me go over to let's go over to our blog. And if you guys are not aware, every day there's a chart of the day. Okay, right? Every day. Here's November 29th. So the end of last week.
Okay. I check them out. I tell everyone it could be part of their daily intelligence gathering. They're all great looks.
Look, this is free. You guys don't have to pay for this. Now, you know, if you have ForexAnalytix, this is one of 30 charts I'm going to upload every night. Me personally. So I'm basically selecting one basic technical analysis chart that I'm going to upload at night, and I'm making it my chart of the day. So like this is the 29th. The dollar index is a triangle support after nearly testing the 618 longer term retracement. You can see it right here, right? The 618 longer term retracement last couple of weeks. The RSI is divergent. The RSI is divergent. Okay, suggesting the last move higher had been a weak move, which means the risk of a break of the bottom of the triangle is where we sit. Triangle where we sit currently sit is relatively high, and
that chart's worth at least $100.
I mean, it's it's yeah. I mean, look, you can go back and look at, you can just look at all of them. Dollar index, S&P. It's breaking out. It closed on Friday. I mean, obviously we're higher right now. We're lower at the moment, but we're trading up here at the 618. The Aussie yen chart of the day. And by the way, I just bought the Aussie yen. So I was looking for a dip and I picked it up this morning. So, and here's the Aussie yen. I expect it to go a lot higher. Yes, it's come off a little bit, but look, we're about ready to test the breakout point. So, I'm going long some. Anyway, these charts of the day are all, it's, even if you're not a subscriber, all right. Now, should you be a subscriber? Yeah, because you're going to get a lot more than just that one chart of the day. You're going to get not only my charts, you're going to get Grega's charts every day if you're an Elliott Wave subscriber, and if you do harmonics, Andre updates throughout the course of the week, tries to keep everything relatively current. Because harmonics are, they don't. It's not easy to. You can't really update everything on a daily basis because that's just not the way harmonics works. But really, just showing you some free options for you if you have not been able to make the commitment of being a ForexAnalytix subscriber, or if you're just kind of testing the waters and saying, I want to, wow, I see all these charts of the day. I wonder what else, that they've got inside of the platform. So, there's obviously a lot of analysis that goes throughout the course of the day. You can actually see, update history, and you can see how many updates, basic technical analysis, Elliott wave analysis that, 2, 3, 4 hours ago. A lot of you guys were already sleeping. So anyway, a lot of stuff happening here. Now, let's talk a little bit about the euro. So the euro is approaching that inverted head and shoulder pattern neckline, and the 78% retracement right here at 114.30 is going to be a big deal. Now, obviously, I'd been looking at 114.50, but it's a downsloping trend line, so we're going to connect with that neckline soon. Now, there's a lot of people that do not believe the dollar can break down. Excuse me. There's a lot of people that don't believe it. But let me go ahead and reiterate everything that I said over the weekend and have been talking about. If China and the US, if the trade tensions ease, that's bearish for the dollar near term. Do I think that China and the US are going to come to some sort of, bilateral agreement, or is it bilateral? I guess between the two of them. I guess it would be bilateral, right? Do I think they're going to come with some sort of agreement? Yeah, eventually. I don't know if it's going to happen in the next 2 months, but I think over the next month and going into the year end, the tensions have eased, and we'll probably see them escalate again January, February. So where does that leave you right now on the euro dollar? Well, if you think about it, over the next month, the euro dollar could very realistically be trading at 116, maybe the 200-day moving average back here at 118. It's all very possible. So to be caught short the euro dollar right now, I think is a risk. Do I think the euro is going to 140? No, I don't. Do I think it could, get to 116, 118 from here? Yeah, absolutely, I do. So, you gotta be careful being on the short side of the euro. Remember, we did have a false break. We do have an inverted head and shoulder pattern. Once that neckline triggers, I mean, you're talking a pretty decent move here. I mean, that takes us to the 200-day moving average towards 117.50. So again, I don't know if I'd be caught short the euro dollar at this point in time. The cable. Again, I don't know what to do with it. But I'll tell you, it's a little stronger today. We do have to get above 128.50 before, we get a little release back up towards 130. I still don't know if I'm brave enough to be trading it on the long side yet. But if the euro does go higher and the euro trades up towards 115, 116, 117, it's going to drag the pound kicking and screaming. Will the pound go back to 140? Not currently, not with the news that we have regarding Brexit and the negotiations that are ongoing. But between now and next Tuesday, the pound could be trading up at 129, 130, just as a result of weak dollar or dollar weakness, not necessarily cable strength. So it's possible. The Aussie, we got past the RBA. RBA basically left everything unchanged. It's like no surprises there. And the Aussie had been trading heavy going into the RBA, and once the RBA was released, the Aussie, tried to play some catch up. Kiwi just hit the 161% extension, and very divergent relative strength. So we are well above the 200-day moving average. I do not think I'd want to be long Aussie dollars or long Kiwi dollars at the moment, and hence I'm still short the Aussie New Zealand, but or long the Aussie New Zealand, excuse me. But we are hitting 161% extension. Relative strength on a daily basis is divergent and reaching overbought. So got to be careful with the Kiwi at this point. Now you talked about the yen, and I'll come back to the Canadian. You talked about the yen, Dale. We are approaching triangle support. Triangle support is going to come in around 112.30, right around here.
Okay.
Yeah, somewhere around there. I don't know if I'd want to be on the short side of the dollar yen just yet. The thing has been extremely resilient, and I look at stocks, and I keep thinking, all right, the stock market is is strengthening, and it's probably going to strengthen in the year end. So what I'd rather be doing with the dollar yen is I'd rather be a buyer, not necessarily right at this moment in time, but I'd rather be a buyer closer to that 112.30. I think the risk reward to being on the long side is going to be a little bit better down here. Here it's kind of like it's still where we're currently set. It's still a little bit of no man's land. So excuse me, didn't mean to yawn on you guys, but that's kind of what I'm looking at with the dollar yen. Now
thanks for sharing it.
Yeah, sure thing. And I was gonna take you over to the dollar Canadian as well. The dollar Canadian is attempting to break lower here. We broke this uptrend line. Crude looks like crude actually looks pretty bullish here. I mean, crude looks like we're going to bounce fairly aggressively. So and I was long yesterday crude, and I flatted it, and I look back today and I'm like, why didn't I hang on to it? It's more of impatience more than anything. But anyway, because I picked it up at I think 52.70, and I sold it at like 52.70. I basically sold it for what I bought it in crude, and that stupid me, I should have held on to it. I knew it was going higher. It was more of, like I said, impatience more than anything. Anyway, crude looks like we're bouncing higher back to this this $55 level, which it's all this big previous support resistance zone. It's going to be big on the way back. You can see its previous support over here back in November. We're gonna probably be brushing up with that. So with that being said, the dollar Canadian is coming back down to its 38% retracement. I think the dollar Canadian can come all the way back to 131. I'm not short the dollar Canadian, but that's where I think it's going. I have traded it actually on the short side a couple of times over the last couple of days, but I missed the trade on Sunday night being short up here at the 132.50-60 level. I totally missed the boat there. So now let's talk about the peso. Hold on really quick. Let me grab a drink of my coffee. So we've got the U.S. dollar Mexican peso, and we have this could be, you know, a pin bar, could be also be viewed as a hanging man, since it came off of a couple of days. You know, it's kind of moved higher, which, you know, if it's a hanging man, it tends to be a reversal pattern. But overall, I think the market does not know what to do with the U.S. dollar Mexican peso. If you get a little bit of risk aversion, the dollar Mexican peso goes up. But if we're going to have risk on, or risk, you know, risk appetite going into year end, the dollar peso should go down. However, do you really want to be long the U.S. dollar, or do you really want to be long the Mexican peso, as AMLO, you know, is now the president of Mexico, and that's something that I think a lot of people have a really difficult time with, myself included, is being long pesos down here, or being long pesos at the moment. So it's a really tricky trade with the U.S. dollar Mexican peso. I think we can retrace towards 20, which is, or 1990, which is the 38% retracement. But I don't know what to do with it at this stage in the game. I'm just not doing a whole lot. The U.S. dollar Norwegian krona, I covered some of my short position. Now, if you ask me why I covered a little bit of my short position personally, is because we are testing the previous broken trend line. You see that trend line? Here it is. Okay. And remember, guys, if you didn't know I shorted the U.S. dollar Norwegian krona, that was a couple of days ago when we had the ascending wedge break, and you can see it with the patterns in play here. We have a lot of good patterns.
That was a chart of the day too.
It was a chart of the day. Yes, it was. After we'd already taken.
Why do you give all these great trades away, Blake?
I gave them away after the fact. So if you're a ForexAnalytix subscriber, you knew about 200-300 pips beforehand, because you know, I waited for the daily close, but you know, because it was already happening intraday. That's when you know, when I issued a pattern in play, it was at 10:07 a.m. you know, which is my time, and by the time I put in the chart of the day, it was like, you know, 4 or 5 o'clock in the afternoon. So several hours later after the move was confirmed.
All right, good. I'm glad to hear the mercenary side come out on you.
Well, yeah, no, it was, I mean, but really it started to break. It started to break over here. And then by the time I put the chart of the day, it was right here. Then we retested, which, you know, if you use, you know, the ForexAnalytix, intraday analysis. I guess it would have been on the 28th. No. The U.S. dollar may reject the 50% retracement, especially if we get a bounce in crude oil. If you're looking for a short area, the U.S. dollar Norwegian krona, this could be it from risk reward perspective. That's because it bounced back like this.
Yeah, it did have a bounce back.
It bounced back and gave a great opportunity for a short. Yeah. But you know, if you use ForexAnalytix, you already knew that.
Yeah,
that's when
that was Friday when the euro gave up the ghost and for a while, and the dollar came back Friday.
That's right.
Everyone was worried about G20. I guess that's what that.
And
was.
It hit right here when that update came out, and it's been an absolute free fall since then.
I love those retests of wedges that are broken.
It's great
because the stop is so tight.
You know, it is, and it's great from like, you know, like as stated here, from a risk reward perspective. You know, from a risk reward perspective, that's, you know, it's a great setup. And you know, those are the type of updates that you'll get with ForexAnalytix intraday. You know, we're testing a key level, might give you an opportunity to get in, you know, if you missed it the first time around, you know, those types of things. And that's what we, you know, at least, you know, I do. I try to point those things out when I'm issuing updates throughout the course of the day. All right, now I know Steve will be here at some point today, and let's see here. Steve we'll be back at some point this morning, but we do have Stelios here. So, and then also Andre is going to be here. Good morning, Stelios.
Hello, good morning. Yes, Andre is going to be here in a little bit.
Yeah, how you doing?
I'm very good. I'm very good. Thank you.
So what's going on from a macro perspective, and how? Tell me a little bit about the cable right now. So, you know, the pound's obviously it's trading extremely weak and it's very much underperforming. You can look at it against any major out there, and it's really underperforming. How do you feel about what's happening over the course of the next week? I mean, the debates are obviously starting here in the next, I think today or tomorrow.
But,
I think.
Yeah. Is it tomorrow? I think it's tomorrow. But anyway, yeah, we have the vote on the 11th. You're right. And the way it looks is that this thing is never passing Parliament. I think that's how it looks. Obviously, there is an outside chance priced in because, you know, hope dies last, and for some market participants. But really, this has been going not very well at all for the UK. You know, it looks like there is really not enough support for this to be passed. So either they will have to somehow change the deal and then try to pass it, or the Europeans said today that actually the Article 50 could be pulled unilaterally from the UK side. Prime Minister May denied that, she said there's no way this is happening. So there's still a glimmer of hope, but really in my view, in my eyes, it's almost priced in that this thing is never going to pass. So what happens afterwards? You know, it's not going to pass on December 11th. We have 3 months left, 3 and a bit, until the end of March. What can we do? Either some other solution is found, some other deal is found, which is unlikely because this takes a while for these things to be agreed, and then another vote. I mean, I don't know how this is going to go. Or the time lapse, you know, we get to the end of March, that's it, and then the UK goes out of the European Union without really a plan, which is not good. You know, this is not a good scenario.
Yeah.
So any way you look at it, right now, it doesn't really look rosy for the pound, does it? But the question you have to ask yourself is how much of this is priced in already? You know, I think
not
that
all.
Really, sorry?
Not all.
Not totally, yes, not totally priced in. But I think, you know, it's not a 50-50 thing anymore. I think it's overwhelmingly priced that this thing is not going to go through, and what happens afterwards, who the hell knows? And also we have to remind ourselves that for there to be a hard Brexit, an exit without any deal whatsoever, that also has to be passed through Parliament. You know, the MPs have to agree on this, and it's a difficult thing to agree to, you know, to put your name on, you know, on a vote. Yes, we want to get out of here without any plan whatsoever. You know, if things go really bad in, you know, a couple of years' time, who are they going to look back to? And they're going to say, oh, these people, you know, they're responsible for this. So, you know, what's going to happen? I don't know is the answer. You know, I still think that the chances of either this thing passing Parliament or some kind of other solution, don't ask me what, I don't know what, but some kind of other solution being pushed, I think it's higher than what the market's priced. That's why I'll be looking to go along the pound if we see any good dips from here onwards. But really, you know, this is a black or white thing. It's a roulette. You know, I don't really know if I want to be a part of it.
Some banks estimate as much as a 25% decline in the cable from current levels if they leave the EU without a plan. I mean, that would take us below parity with the US dollar. Yeah. Can you believe that? I mean, I don't know if I've ever seen, I mean, if you look at the cable and ever, I mean, since, I mean, 94 is as far back as these charts go, but we could go back even further than that. I mean, can you imagine? I mean,
I cannot. And personally, if I think that if I get to the point where I want to buy the pound, it will be against the euro and not against other currencies. Maybe against the Kiwi as well. I'm not sure, but really, it's against the euro because it's all gone so far. Yep.
Personally, still at parity, I would be buying the cable against the US dollar. No questions down, hands down.
Oh yeah. I don't think it's going there though. I don't think this is an extreme scenario. But you know, if there's a bounce in euro sterling towards I think it was 90.92 is a huge level. If it gets anywhere near there, I'm going to be definitely shorting it. but we have a long way to go until then.
Yeah, I mean, if you look at the last big spike up in the euro pound, and I remember when the euro pound back in 09 was moving up here, and a lot of this risk at this point was that the market had talked about, and it was all during the financial crisis as well, but also about the UK. The whole reason why this rally is the UK would eventually join the EU and might even become part of the Eurozone, and that was like a big thing back then. I remember that's why this whole rally was actually taking place at that point, but I mean, you start getting up towards, parity from euro and the pound. I mean, that's not really a far cry. I mean, to see it up there. And I know you're like, well, I might short it at 92, but how about if we broke 92? Where would we go? And I've always envisioned that the euro pound is going lower, and and I have a hard time grappling with the idea that the euro pound could actually go back towards 98 pence, up here. But man, I don't know. I really don't know. And this is one of the reasons why I'm just staying far away from the cable at this moment, because I just really I'm unsure about everything. Yeah.
But we also have to think about one more thing. I've said this before in the webinars quite a few times. The UK was the second biggest economy along with France after Germany, and that's leaving the EU now. This is a huge hit for the EU, and not only that, but we will have in a year, 2, 3 years from now, we will have an idea of how a country can do outside of the European Union. The UK will be the first one that will, that we have some evidence. And okay, the UK is not Greece or
Portugal, but that's not going to be comparable to what a country will do after getting out of the Eurozone, right? It's very, very different. Because I mean, if the Italians, for example, if the UK does okay, which I think they will eventually do, and then come the Italians and say, oh, look at the British, they left the EU and now they're okay. But it's not comparable in any way, right?
I know and I agree, but you know how markets work and how sentiment works, and these things can take a while, and you can have a big move in a pair, even though, like you say, it's not comparable. The conclusion you're making is actually not applicable to all the other countries. So, but still, how it works.
By the way, since I can help you with charts, I'm in a taxi actually. It's quite the traffic is quite heavy. I don't know if you saw, and you mentioned, because I know that you always mention fundamental developments, that actually yesterday financial ministers of the Eurozone agreed on giving more flexibility and strengthening mechanisms of the Eurozone for events like the ones we had in 2010 and 2011. And personally, I'm more interested to notice the timing of them deciding to do that. You understand what I mean, Stelio, right?
Sorry, I didn't read that. What is it they're trying to do? Say that again.
They gave more powers and more flexibility to the European Stability Mechanism, and they're trying to create stronger backstops in case of a financial crisis in the Eurozone. And I find the timing quite interesting. So in my opinion, it's an indication that even from the Eurozone, they're looking forward to the next recession as something that's probably, closer than, further away.
Yeah, I was going to say
probably related to Italian ice cream.
But
that as well.
Yeah, I was going to say this ties in well with what you've been saying, that the next recession is closer than people think. We've already been on the 9 years of expansion now, or something like that. So
yeah, we're way past the cyclical range of a normal expansion. So yeah, I think that's pretty normal.
Yeah.
So
Okay.
So, hey, you know what I did, guys and gals, is I brought in Andre. Andre's here, and he's actually going to talk about some harmonic patterns that are setting up. Andre, can you hear us?
Hello, everyone. Yes,
Hey.
I can. Thank you very much, Blake.
Good morning. How are you?
Hello.
Good morning. I'm fine, thank you.
So I'm really excited to see what you got brewing, because even last night I saw a Bitcoin chart come out, and I'm like, man, Andre's getting long Bitcoin.
On Bitcoin.
Yeah, and obviously, you know, you pointed out an ABCD pattern here, but I'll let you talk a little bit more about what you're seeing. But I'm
you want me to tell you a funny story, Blake? The moment I saw the Andre, you know, the notification that Andre made a long Bitcoin pattern in play, like 10 seconds later, my iWatch prompted me to do a breathing exercise.
That's pretty funny.
I can imagine, Steve. I can imagine. So it's not usual, because Bitcoin is not my main instrument that I used to work with, but it's a very interesting setup that I'm following, not only for Bitcoin, obviously, but in general.
For cryptos in general. And by the way, I passed you over the chart so people can see what you're talking about.
I'm not sure if you are.
There you go.
Okay.
I can see Bitcoin, actually.
Yeah.
If guys like Andre and Grega are charting out their methodology in Bitcoin, I don't care, Steve. I don't care what the title is on top of the chart. How about that?
No, I agree with you. I don't doubt.
You know.
I forced. Yes.
I know you're. You know. I know. You know. I bet you have a big wallet full of Bitcoins, and you won't tell anyone when you do. Go ahead, Andre. I'm interested.
He had to empty part of that wallet to renovate the kitchen.
No comment. Okay. No, you know that I forced my brain to embrace all these patterns and behaviors, and I don't need too much to identify a specific price behavior, and I'm used to do that for the last 7-8 years. I forced my brain to search for these specific behaviors, so it's not difficult for me to identify them. But it's a very simple process. This peep that I pushed is based and supported by a double bottom initially. Usually people tends to buy the breakout of the neck. This is also a technical double bottom, where I've already discussed this here inside ForexAnalytix. So it's a retest of the body candle close price below the first bottom. The price later has retested that price, and it has rejected to trade below. Broken neck, resistance above the neck, and that is the point where I will start for the pullback. As soon as I identify a top or a high, actually the market then later develops into an head and shoulder formation here, a kind of head and shoulder formation, helping reinforcing that thought. This is a new high, a new top. I need a pullback to the golden ratio. So at this point, if you push the Fibonacci tool, and if we measure the bottom to the previous structure resistance, the most recent one above, and if you push the golden ratio, we will see the price actually bouncing from this level. So if the price, and we have one example that I will push in a few moments, in order for people to get synced with the possibility that pattern can create inside price action. So basically, we buy the golden ratio pullback with stops below the bottom, and we expect a symmetrical price behavior, where we can imagine this as an ABCD pattern, a symmetrical ABCD pattern. First target, but this is my personal option. I have always a first target position at the previous structure resistance. I identify a pressure zone as a resistance zone if I'm buying the market to identify my first target. This is also my phase one partitioning strategy. So at this point, I break even my trade. I can start to partitioning my position, and then I have a second target position at the default 127 extension from the bottom to the most recent resistance projected at 127 extension. So this is also confluence zone between a default symmetrical ABCD pattern positioned at 46.63 or around that at 127 extension. And let me show. So this is the motive that I've created, the setup that I have found with a motive to engage in the long on Bitcoin. Let me show you the most recent example, and I need to go back on Dixie, and I need to change I need to change my time frame here to try to and this was a great trade because it's on a daily, and just for us to take an idea what the 2618 setup can provide us. So I've shared this setup inside ForexAnalytix at that period. So this is a daily time frame. We need to go back to February to identify that pattern. So we have a double bottom here, and it was followed by the 618 retracement. At this point, I've created a PIP here. We have traded a few points on this position. I believe, I can't remember exactly how many. I believe I've targeted the 200 moving average crossing above as my targets, but then the market extended to the 2618 extension. So attention, because dollar index Dixie is now trading in a zone that I consider as a bearish territory. It's a bearish alt-bat pattern territory. The market actually has extended a few points above, and it's now trading, as Blake has mentioned before, is now trading above this structure trend line as potential structure support. So breaking this level should force the price to fall, obviously, and below this trend line, I have to identify the next pressure zone. So I have a first cluster zone between 94.46 and 94.09, something like this, between the 160.8 extension and the 38% retracement. And this is my first target, the 38% retracement for the pattern extended a few points above. So this Fibonacci level is also adjusted at that high. So we have now a target position at the 38% retracement, which is also a confluence zone between this cluster. It's a cluster zone between a Fibonacci extension and a Fibonacci retracement. Below that level, and we have also the 200 moving average approaching from or targeting or pointing to that level. Which can reinforce this level as potential support level.
Okay. Yeah, so Andre, you know, a lot of people looking at the last line that you have, the last candle, and they're going, oh, I missed it, I'm late. And what you're showing is it's just beginning, you know.
Oh, yes.
Today's the first day you have confirmation of a trend break. So, you know, I used to think that if I wasn't short from the top, I didn't have a lead into a breakout or failure, that I was late, I missed it. But, you know, nowadays I think, wow, it's just beginning, and now I actually have
eventually, Dale, eventually. We are talking about probabilities only. There's a huge probability or a higher probability for that to happen, and that's what we are expecting.
Right.
But that, as I used to say when talking about patterns, or specific, in this case, harmonic patterns, a projected pattern is not tradable. So if what I mean is, if I believe the markets will sink into this level, that will not offer, it's not offering me a short opportunity, unless obviously I find a motive to short the market based on a different approach. If somehow I have a bearish pattern to short a market position below on a lower time frame, I can try to identify a trade in that direction, assuming that the price and let's say using these bullish territory as targets. But I need a strong motive to trade that. But obviously, for those who are trading structure breakouts, it can form a setup to trade. So we wait the breakout, we wait the pullback, and we short the market.
Okay, so you know, I've noticed, Andre, and it's like this for a lot of traders. A lot of your trades, you know, there's very little drawdown. It's immediate gratification. You don't have to be patient. But with your recent U.S. dollar yen call, you've really had to be patient, and now it's starting to roll over.
Patient and disciplined also. Yeah, you need to be extremely disciplined to survive that. And a stomach made of steel, no? Because
you know, so I guess the best traders are the ones that detach and don't feel it, you know, physically, their trades. But what kind of self-talk do you give yourself when things are taking longer than you thought they would to manifest?
I don't think that. I don't think on that. I'm completely immune to that. I have my. I start with an idea, Dale, and I remain to that idea until the end. The end is my invalidation point. I know where the pattern will fail. If the pattern fails, I don't need to remain inside that position.
But when the market's heading up towards your stop, do you try and like put your cursor on a candle and drag it down?
No, you have a lot of options, and I like to share them with my people. All of those. You have partitioning your position. You can try to decrease your position size in order to decrease your eventual
anxiety level.
If you feel uncomfortable with your position, and an extreme reaction is a closed position. So if you don't feel comfortable trading a specific trade setup, if somehow the price is reversing against you, if you don't feel comfortable trading it, just close the position as soon as possible. That's why I found on harmonic trading a friendly strategy to trade, because it allows me to identify the potential reversal price. It will not require extremely extended stops. I get always a friendly risk reward approach trading those harmonics, and based on that, I just need to remain quiet and tranquil. I'm not sure if this is the best expression, but I need to.
That makes sense.
Yeah, we need to stay because I'm trading them from so long, and I've seen situations threatening my stops, providing me 150 points later. So I remember one trade on euro dollar last year threatening my stop loss by 15 points, and then provides me 150 points profit. So, and at that point, obviously, we start to sweat from all our body. You know, you start, okay, eventually the position will break. It will break my stop loss, but sometimes it will not break. Sometimes it will threat your stops. And if you respect those levels because you need to remain loyal to your first and initial trade setup.
That's a great quality that you share in common. That great interview that Blake did with Ronnie.
Exactly.
Afterwards, Amanda's takeaway from that was, it doesn't seem like much phases him.
Yeah.
Okay. So, I mean, that's cool. Ice water running through his veins type of thing.
That's
right,
the way.
Blake?
That's the way. And I believe we all share that knowledge, especially with Blake and you, Dale. At least in my opinion, your experience talks by itself. So
let me get out of my fetal position here.
Yeah.
All right. So what else do you have on the menu?
Yeah. Let's try to jump in on cable.
Because no one knows what to do with this. So even the Brexit background noise of the Brexit won't make you pass on a harmonic pattern if you see it, correct?
Correct, because the price reacts based on human behaviors, no? So usually those patterns will try to provide you something. I'm not saying if the bullish crab pattern is printed here, I'm not saying it will offer you 38% of retracement profits, but there's a higher probability for the price to react that way. So no matter the fundamentals behind the scenes, you have all those pattern behaviors inside the market. And the reason why I said before a pattern is not tradable unless it's printed. So if I see, so I can identify a bullish.
So that's the active pattern that exactly. You're working with right now.
We need to wait for those patterns to
okay.
work. And again, unless you have a different motive to trade the market, a pattern breakout, a structure breakout or something, or on a lower time frame that allows you to engage the market in that direction. If you believe the market goes in that direction because you are in a bearish trend, you can try to identify bearish trade setups. Note that last week I was expecting this eventual right shoulder to react. The market actually has reacted well from there, retesting the highs, but now is threatening again the previous structure support. This was the last one of the last patterns that I've shared on cable for the ForexAnalytix community, this bullish trade setup. And then at this point, I just need to wait. One of two things: the market will trade higher and will search for the structure resistance trend line approaching from above, or it will break the previous support and it needs to find support below. If somehow the price starts to behave or to print some type of lower time frame reversal behaviors, we can try to maximize this price movement, retesting the previous structure. And that's why I like to identify my targets, and I like to try to get some confidence with the structure. So usually the crab will target the 38% retracement, which is also the previous structure support. It makes sense to see the price reacting from this level, retesting the previous support. It will happen, we never know about that, but it allows me to identify, first of all, my reward, and obviously based on this reward, we can manage our risk for this trade. So I trade for 295 points. So we already know what we need to do with our stop loss position below with a friendly risk reward approach. But again, if the fundamentals behind the scenes will cross these or break these levels and trade below, we never know about that. And no matter the fundamentals or the technical approach that we have, the market can invalidate those levels, and it's just another way. It's just another pattern that failed, and you need to search for the next one. But again, I know what to do when the market reaches specific price levels. So this is cable at this moment trading inside this structure. It has found some resistance again. This is a 12 hours time frame, so it has found resistance again, and we need to trade above or below that structure.
And Andre, I don't think 124 is outside the realm of possibilities in the near future. You know, it looks very doable.
Actually, we just need, based on the trends, and it's clear for everyone, I believe, that are here. So we are inside the bearish momentum. So actually, I will not be surprised to break these previous support levels. Not at all. Not at all.
That's not the Christmas present that I think people are looking for.
Eventually not. Eventually not. Yeah.
Hey Dale, do you have a interview coming on today, right? Just making sure that he does. Let me double check that. Andre, what else do you have? What else do you have going on today?
For today, specifically for today, we don't have any harmonics completing at this point. We have a few, like the yen pairs falling into that trend line that you showed before. Patterns below, bullish patterns below the structure, but at this point I have my first target on a daily basis, on a daily time frame, positioned at 110. So this is the 38% retracement for dollar versus yen, the 38% retracement from all this bullish momentum,
And that's if we break down, but it doesn't mean that we're going to break down.
Oh, of course not.
Yeah.
Of course not.
Okay.
And again, I will start to pay attention to those bullish patterns when they start to when the price starts to approach those levels. No.
One last thing, just before you go and Coach takes over. What do you see on the S&P right now?
S&P, as I published it before, we still below the previous structure resistance. That cipher pattern that I showed you before at 78% retracement. So this is the pattern, the eventual cipher pattern at 78% retracement. It's still valid because the price failed to break the previous structure support. It's still valid, not so harmonious or not so harmonic because the market has retested these lows before completing the pattern. I can see also one kind of cup and handle formation, and the price needs to pull back. And we have also that internal or minor or lower degree cipher territory at 78% retracement. The pattern completes at 78% retracement, extended above at 88% retracement, retested the highs, retested the previous structural resistance and failed. I assume, I believe there's a possibility for a retest of those highs. This is also the 61.8, the golden ratio as a resistance. Default targets for the cipher at 38% retracement from those highs. The 27.14.
If we get through that, if we get through that 61.8 level, what are your areas? It looks like 78.6 up around 28.85 or so up there.
I will try to identify.
Okay, Blake.
Yeah, the 28 CC9. I will try to identify this cipher pattern above.
Okay, buddy. So I'm waiting for my guest. We still have time if you want to show another instrument, Andre.
Mm-hmm. We have also 10 years. This is a chart that I'm following for a while.
Yields.
Yields.
Yeah.
This was a double top, broken neck. We are now trading below the neck, and we have a bullish bat pattern at 88% retracement below.
86. So there's another 10 basis points potential.
Exactly. Not in my point of view. So this is also the default projection for the double top. So eventually at 78% retracement. I will not be surprised to see that this zone acting as potential support level or support price zone, and see a bounce from here. Obviously, and again, the objective when identifying the pattern is to identify also the potential targets for the pattern, and based on this pattern, we will target the 38% retracement from these highs to the completion point at 88% retracement. So this is nothing more than, let's say, a bounce to the 38% retracement. So this is the trade that we will search for at this price level on the yields. DAX. That's very similar I say very similar in terms of momentum with S&P at this point. At this point, I can see both trading higher. The market is now trading above this minor structured trend line, approaching the 200 moving average, also has potential of resistance. And the next zone. So this is also a technical double bottom. I believe.
Great work, Andre.
I believe it's clear on a daily.
Nice.
Actually, let's remember this chart because I shared this 2618 trade setup above among the communities. So this is a technical double top, a broken resistance, broken neck. I'm sorry. Then a support below the neck, the pullback to the golden ratio, and then the market extended below. So at this point, the market is forming one potential technical double bottom. We have the neck position at 1165, trading above. I admit the formation of a resistance above. It can act, this pattern can act as that resistance level or not. We have this previous structure supports, also positioned at sync with this 38% retracement. So I will not be surprised to see DAX trading the 38% retracement, synced with this previous structure support, the golden ratio pullback, and then again and always the ABCD pattern projected by default above from the golden ratio. I'm not sure
Andre.
This is the golden ratio.
You know, great work, and you know, I'm a singer. I proved it to you this morning. So you know, I appreciate harmony and harmonics. All right, I love music, and you know, basically, music is harmonics. So you're doing it with price, and musicians do it with notes. So keep up the great work, buddy.
Thank you very much.
My guest is here.
Have a nice week, everyone. Thank you for being here.
All right, good hunting, bro.
Thank you.
Thank you, Andre. Everyone, thank Andre. And Andre, what's your Twitter handle again? You want to give it to the people so they can follow?
Trading Jazz.
Trading Jazz. See, there you go. Yeah. My Cocker Spaniel's name was Jazz. So, you know, you're thinking music too. And you could find Andre's work here at ForexAnalytix. All the harmonic work is Andre. So good hunting the rest of the day, partner.
Thank you. You too, Dale. Thank you.
Thank you. Olivia, I'm now going to make you, let's see, I will make you mute. How come I'm not getting that? Well, let me make myself the presenter first. Okay. And now I'm going to make you a panelist. Everyone stick around for Olivia. I don't know why it's not letting me connect it to audio. I'm trying to be able to make you, I don't know, maybe it's because Andre didn't sign out. Let me see. Apologize for this. Steve, you're not around, are you? Okay. Okay, Olivia, maybe you're already ready to go. You're connected to the audio. Okay, I'm having a hard time. Anyone out there to help me?
Hello, Dale.
All right, Olivia, you're there. Okay.
Oh, wow. Hello.
It is great to meet you.
Likewise.
All right, so you know, I learned about you because you know we interview some similar people, and I get Sarge Guilfoyle's email every day, and he shows a lot of appearances that he does with you. And you know, my main question as I look at what you do now, it's interesting to me to let me take you back to your college days. And, you know, back then we're all thinking about what we're going to do for the rest of our life that turns out to be maybe different and a long and winding road to where we are now. What were your dreams and goals back then, and what led you to being a financial reporter?
It seems that both hard work and fate has been the builders of where I am now. I've always seen myself in broadcast media.
Okay.
But it was a freak accident ending up in finance and on Wall Street.
I'd like to hear about it.
Sure. So I went to school for international relations.
Okay.
And through connections, I was presented an awesome job on Wall Street as a sales assistant after school. So that's how I got into finance, and I had to learn it all at my job.
Okay. Yeah, that's interesting. So that was kind of like, was that an internship that you were doing for a brokerage house or something like that?
No, it wasn't an internship. It was a full-on signing bonus sales assistant position.
Oh, wow. So, yeah, great. So you had to become licensed, Series 7, right, to do that?
Yes, I had to become licensed, and yep.
So you're the person you were an assistant for was also your mentor, and you probably learned a lot from that person. You know, talk to us about the evolution, about how you learned how markets work, and was it through this job? Was it through finding books that influenced you, or watching financial content on CNBC and Bloomberg? How did you learn about the markets? Because sales assistants and even brokers, a lot of brokers, they're mainly sales guys and asset collectors. Some of them are very good traders, but a lot of them are just, you know, bringing in assets and deploying them according to what the firm thinks is the right structure for a portfolio. How did you verse yourself in, you know, stocks and bonds and commodities and how they all interacted with each other?
To be honest, I learned most of that as a reporter than a sales assistant.
Okay.
Basically, yes. Listen, I have to interview really smart guys and girls, so I had to extend my knowledge in the bond market, stock market, and that's when I really delved into watching CNBC and reading the Wall Street Journal and following markets. And now I've recently found a passion for technical analysis.
Okay. Do you trade?
I have traded in the past, yes.
Okay.
So I'm familiar.
Go ahead. Yeah. Okay. Go ahead. So, you know, that's interesting. I came about it a little differently. I was the guy you were asking the questions to. So finally, for many years, and the last several, I thought to myself, you know, sometimes getting frustrated, knowing that the guest had, you know, great ideas and great content, that sometimes the interviewer wasn't asking the questions I wanted to know the answers to. So I decided who better to ask the questions than someone who's been answering them. And, you know, so for me, and like you just said, what you do with your guests is what I call intelligence gathering for your viewers. You're providing content and ideas that may offer opportunities for them in the market. Is that your goal on every interview with your guests, is to get something that might be actionable for your listeners?
Exactly. Whatever can make them money or protect their money.
Okay. So tell me who your favorites are. Your go-to
come on,
guys.
I don't have
You don't have the time? Okay, I won't say favorites. Who's your specialist in stocks? Would it be Sarge?
I would say Stephen Guilfoyle. He was my first interviewee, and he
Great guy.
From there, we've made a show together.
Mm-hmm.
We've had really exciting times.
Okay, and do you have any kind of go-to person for the commodity market? You know, if you want to know what's happening, go ahead.
I would like to invite you on the show for that, because I've been looking for a good Forex and commodity guy.
Oh, well, gosh, you know, then I'll call this fate or providence. And I guarantee you it really wasn't the motive, because I thought it'd be interesting to talk about how do you prepare yourself for each day, and do you love doing this stuff on the floor? I mean, my background's from the CME, and I know the exchanges are not as great as they used to be, as far as how populated they are. But do you love being on the floor?
Absolutely. The floor is magic. Just seeing the community with the traders there, and they each have something different to offer. I interview traders all throughout the week, and some are very colorful, like someone like Peter Tuchman. He's the most photographed man at the New York Stock Exchange. I'm sure you're familiar with him. They call him the New York Stock Exchange Einstein. Then we have someone like Jonathan. Yes. Then we have someone like Jonathan Corpina, who I'm interviewing later today, who's very honest and down to earth, and he's more of a long-term perspective.
Okay. When you're on the floor, do you notice times when things get real busy? And you know, a lot of people say that there are certain times during the day when Wall Street is more active, and you know, then there's that quiet period where everyone goes to lunch, tries to find a lunch special. They had, you know, $50,000 swings, $100,000 swings on the floor, but they'll go somewhere to save $10 on lunch. Do you notice that things slow down a certain period of the day, and things are more active near the open and the close?
Listen, when I'm on the floor, there's always action. I'll make it happen.
All right. Well, it's interesting. How were you handling periods of high volatility where a lot of people were kind of throwing up their hands? There was mini panic. How do you keep your viewers stable when things are becoming unstable? And are your guests kind of the balance for them not to overreact to what's happening on a day-to-day basis?
Yes, I mean, we've all been there where there's heightened volatility and we don't know how to handle it. And I was getting, I could just understand the fear even through the Twitter feeds, and I was getting a lot of questions. But I thought that it could, how to find how to handle that and actually turn it into opportunity. That's where I started grabbing someone like Stephen Guilfoyle. He's amazing in the option market, for instance, or someone who has a lot of knowledge how to handle that.
And where do you broadcast your shows? I've had links to see your stuff. Is it live anywhere so people could watch it?
We do go live on Mondays. We do more of a business-oriented talk show. It's called Bloodies and Bagels, where we have Bloodies Marys and bagels and talk about the business gossip of the week, if you will. And then my interviews are all conducted in or outside the New York Stock Exchange and our office on Wall Street.
Oh, good. So you have a studio set up to do that show. Nice.
Absolutely.
All right, nice. So let me ask you this. What's the biggest lesson you've learned covering the markets and speaking to professionals these years as a news reporter? What's your major takeaway that you hear from everybody?
You mean a lesson about the markets, or how to
you know, I think the markets are a lot like life. So, you know, in fact, I think sometimes they're a metaphor for life. So a lot of things that, you know, being in the market and trading, you could have charts and everything, but it's my belief 90% of it's in your head. So, you know, something about psychology or an important lesson you learned while you were trading. You know, most people will say control risk. What would you say?
Don't be stubborn.
Oh my God, that is, you know me. All right. All right. So have you been stubborn?
Well, it's not a quality I like to brag about, but we've all been there. We've all been stubborn, especially with our money. If we really believe in something, if it's not working, just get out.
Okay, well, you know what? That's a lesson I've had to learn a few times. You know, a friend of mine would say, Dale, how many times do you have to get hit in the head with a ball-peen hammer to know it hurts? So that is great. You know what? I think everyone listening to this interview or watches it later on video should write that down next to their trading station. Don't be stubborn. And, you know, and I'll tie that in with W.D. Gann's I would call it one of his famous sayings is, you have to learn to change your mind or you won't have any change left. So don't be stubborn. It's a one mistake business. Don't make it. Olivia, really nice to talk to you. And I really love your broadcasts, and I watch them mainly on videos, but I'm going to try and catch you live. And I'll grab a bagel with cream cheese, throw a little lox on there with a tomato and onion with my Bloody Mary for your next show.
Oh, perfect. Yes, we'll absolutely have you on Bloodies and Bagels or sometime on the show. It'd be wonderful.
Well, I tell you what, like it or not, you're now my trading warrior sister and fellow host, interviewer, and it was a pleasure to talk to somebody who works hard. People think it's easy just to have a conversation with somebody, but to keep the flow going and to make it interesting and fun. You know, don't you think that you also have to have fun doing this? And I could tell you love it. Am I right?
You are 100% right. I love it. It's a growing love. It's such a wonderful experience. And I like making it fun and interesting always for people. However they can make money, I'll get it at you guys. I promise.
Okay, well, I'll take that promise to heart, and I know that you're out there doing your best to dig out great ideas for your viewers. I hope that your viewership grows like a mushroom and continues to expand and your audience expand, Olivia. And really nice to meet you, and thank you for taking time out of your busy day to hang out with us on Face for a little while.
Absolutely. Thank you for inviting me. This was really interesting for me to be on the other side of the mic.
Okay, well, see, this could be a new niche for you, is that you're learning every day as you try and help your viewers learn. And as that continues to go on, your expertise grows. So I guarantee you this will not be the last time you're on the other side of the mic. So thank you for your maiden voyage with us on the other side of the mic. It was a pleasure interviewing you, Olivia.
Thank you. Thank you again.
Okay, good hunting, my trading warrior sister. Say hello to Sarge and all the guys, and keep in touch, okay? And
will do. Thank you.
And Merry Christmas and Happy New Year.
Yes, Merry Christmas and Happy New Year. And guys, check me out on Twitter. I don't have a reel, but I have the real stuff there at Olivia B. Vaz.
Got your Twitter handle. You're up there, and this interview will be tweeted out there later today, Olivia. Thank you, and have a great holiday season.
Thank you. You too.
All right, everyone. That's Olivia Voznenko. You could follow her on Twitter at Olivia B. Vaz, and you could catch her on her website here. Here's her handle right here. She's on her car phone, So thank you, Olivia. Here you go. Don't trade and drive. I'll let you interview. I hope you pulled over, but maybe you didn't. You're a multitasker, and
I could do anything.
all right. There's an attitude, and her website's Vaz News, where she has a lot of her content. If you miss it live, there are lots of great recordings and contents with Sarge and Olivia's crew. So that's it for Turnaround Tuesday, everybody. Enjoy the rest of your day. Good hunting, and remember, don't just count your pips, count your blessings. I will be off tomorrow. I'm going to be observing the National Day of Mourning, but you know, we have a great team here. So this webinar will go on, and I'll see everyone on Thursday. Adios. Thank you again, Olivia.
Adios.